Look what it took to wake gold up. It took this surprising news with the confiscatory nature of having a hit on the depositors' money. All the news about the Bank of Japan buying unlimited amounts of bonds, news of probably inevitable QE from the Bank of England, continuance of QE by the US, did not do much for gold. Gold remained at the 1600. It took something, we woke up on Monday or Sunday night and we hear this big news for gold to go up how much? 5.7 US dollars. Here is the thing that we need to tell the clients. Gold bounces that were as a result of Eurozone crisis were short-lived. Okay? We saw this in May of last year with the Greek election uncertainty. Gold went up. Why? It went up against the euro in euro terms because of the knee-jerk reaction by euro investors to take money out of the euro and put them in gold. But if you look what gold did against the US dollar back in May, it did not really rally that much. And what we're seeing in this, of course, we look at gold in US dollar terms. It is a reaction to what gold is doing in euro terms. So if we take it back to the dollar, we think gold is just going to go up to probably 1630, maybe 1640.
We're about 1610 today, okay, so $20 or $30 more.
Right, maybe around, exactly, around 1630, 1640 before it comes back down and retest 1500. We are looking at gold in euro terms. The big resistance is 12.85 euros per ounce. Right now is around 12.49.
Gosh, that's a big call, isn't it? So the bull run that's lasted 12 years, Ashraf, that's over. Game over, done, finished?
For now, yes. And of course, if you're going to speak to a gold fund manager after me, you know, he's going to say, well, because of the forced the selling, and the gold bugs are really hoping for a deepening crisis in Europe. But I don't really think we're going to see it. And here's the thing. But on one hand, we do not expect the Federal Reserve to finish or to slow down the rate of the purchases. But people need to look at something, gold versus yield. I know it's too early in the morning for this, but if you look at the gold to yield ratio, it has been coming down. And we do expect bond yields in the US to push higher to 2.6 and 2.3, and that is going to cap gold.
Okay, let's talk Cyprus, Ashraf, because you're not too worried. You say the contagion fears are unwarranted. Why are you so confident?
Redoing the definition of contagion, this new contagion, it's not what it used to be. You know, the inability for Italy to raise money in the bond market. You know, the inability for Greece. This is the unexpected element of touching the deposits of human beings. You know, of the small accounts. And I think that they really have made very clear that they're going to guarantee the deposits under 100,000 euro. 100,000 euros. So that panic that we saw on Sunday night, on Monday morning, is going to disappear. And so the contagion, the only contagion is because of that element, and that element is going to dissipate. And of course, it doesn't pose a huge systemic risk. It's less than 0.2% of GDP of the Eurozone. So I think there has to be a deal between the Russians, between the Cypriots, between Merkel, who does not want to lose an election, does not want to be seen someone who lost one Eurozone nation ahead of the elections. And I think we need to worry more about Italy and what's going to happen. Are they going to have a leader in
And save that thought, Ashraf. We're going to focus more on Italy next. Ashraf Laidi, he stays with us. Let's get back to Ashraf Laidi, Chief Global Strategist at Citi Index. You said, Ashraf, that Italy was your big risk. Have you been surprised the euro hasn't risen more, hasn't moved more this week? It's down by 1%, biggest fall since early February. Have you surprised, taking into account the news out of Cyprus, we haven't seen a bigger decline in the euro?
Not surprised. The technicals are supporting that. If you're a technical person, there is the 55-week moving average, there's the 200-day moving average, and they're all conspiring to give support around 128.30, 128.50. From the fundamentals, as long as the Federal Reserve continues to buy bonds, that is a positive for the euro. There is the realization, here's the thing, there is some sort of numbness in the market. You know, 3 years ago, people were easily panicking because of something happening in a Greek bank. Right now, you know, there is no elections. The Italians are without a leader for week 4. And markets are quite numb to it. It takes a while to impress people nowadays. You know, we're a brave new world there. And I think it's the same thing for the Eurozone. People realize that the systemic risk is not really so large from Cyprus. And I think that what would take is probably if the Russian says there's no deal, if Cyprus, if we're going to hear the word exit more, and also if there is really if there is no progress from Italy, that would give confidence for people who are called currency traders to actually bring the euro down below this key level of the 200-day moving average. And right now, we probably don't see it. So I do think that we may be supported around 128.30, 128.20 before we push higher towards 132, 133. Last time I was here, I said the euro is going to follow up towards 140. I was wrong. And
well, you got to 137 or so, didn't you? So
it did, yes. So right now, I think any rebound. I think that speaking about the British pound against the US dollar, even though we have a nice rebound, I think it's not going to last. It's not going to last. I think it's going to be capped around 153.
Because of more QE, because of measures by the central bank.
Absolutely, absolutely.
Okay, what about the yen?
The yen?
Because some disappointment in the last 24 hours that Kuroda at this news conference didn't fill in the details, you know, cross the T's, dot the I's. He can do that in due course, but that pushed the yen a little bit higher against the dollar. Are you still bearish on the yen?
Short answer to that question is we think dollar yen is going to go towards 102.
Yeah.
Why did the yen go up, also including against the US dollar, when we had these concerns from the Eurozone? Why? Because the currency market did not want to concentrate all the safe haven reaction into the US dollar 1 or 2 days before the Federal Reserve was going to renew the purchases. So they needed to diversify the safe haven flows, and they needed to take some, they needed to basically to fade the weakness in the yen. So some money went in the yen, so call it a profit taking in the yen crosses, and that's what we had. But I do think that dollar yen is going to gradually go up towards 102. Why? When the Japanese fiscal year ends and the new one starts, and when Abe takes the lower house, takes the higher house in July, that will give him more of a confidence to get the yen